Good morning, and thank you for coming. I'd like you to relax, enjoy the session. We'll take some questions at the end, and we're very lucky to have on our panel this morning the CEO of AUSTRAC, Brendan Thomas, and our very own Roger Habib, who is our Chief Transformation Officer. I'd like to start by acknowledging the Gadigal people of the Eora Nation, the traditional custodians of this land, and I pay my respects to their elders past and present and recognise their continuing connection to our land, waters and culture. I extend my respect to the Aboriginal and Torres Strait Islanders people here today. So let me start with a question and a raising of hands. Is your organisation ready? Thank you, Gavin.
Roger, are we ready?
You're not alone, if this is any comfort, in your hesitancy in putting your hand up. I've been to a number of sessions myself on AML, particularly run by the Law Society of New South Wales, because, as you know, we're one of the Tranche 2 entities, and even within the realm of lawyers, there is a lot of hesitancy by, I think it's more around people going, we're just waiting for more information to come out. We'll get there. We don't feel we're ready at the moment. We're still trying to understand the rationale behind the why of it because we're already a heavily regulated industry. So you're not alone. And so you can take comfort for that, but you can also take comfort in the fact that there's a lot of support and a lot of information and a lot of training sessions that are put out by AUSTRAC as the regulator, and it's really going to be interesting to get as much information as you can from that and really understand that the role that AUSTRAC is playing in getting us all ready for the reforms. So I think one of the first things that we should do is what I call set the scene. So in a global context, the Financial Action Task Force is the global watchdog that sets international benchmark standards for anti-money laundering, counter-terrorism and proliferation financing. So there are about 40 international standards known as recommendations. This is for countries to really adapt and implement their own frameworks and financial systems. So it monitors the recommendations through a peer process of mutual evaluation and public listing of companies with a weak AML CTF systems. Now, in 2015, the Financial Action Task Force undertook a bit of a review and identified weaknesses in Australia's compliance with the standards. And this was a really interesting exercise because there's a blacklist and then there's a grey list. Now, blacklist countries are subject to a call for action by members. So they're a list of countries with serious deficiencies to their anti-money laundering and terrorism financing. And so we don't want to be on the blacklist. And some of the countries on the blacklist are countries like the Democratic People's Republic of Korea, Iran, Myanmar. And of course, there are the grey listed countries as well. So the grey listed countries are those who are actively working with the Financial Assistant Task Force to try and address some of these deficiencies. You'll see from some of the quotations there, a poor assessment would risk Australia being grey listed. We also know that being grey listed could have serious economic and reputational consequences. So there are consequences that arise from not complying with or having a robust system that addresses some of the risks and the gaps in compliance. So let's talk about what is money laundering. and you'll see this quote from John Sweeney, who's a British journalist. He says, it's bad form to mention money laundering. Instead, you talk about asset management structures and tax beneficial schemes. Now, a lot of these kind of schemes and asset management structures, we see them as, I suppose we're all kind of gatekeeper industries, and we're very familiar with setting up structures and different types of schemes for clients. So the question is, how does this link to money laundering, or where are the gaps that can open it up to money laundering? So Brendan, I might start with you, if you could walk us through the meaning and the elements of what constitutes money laundering.
Yeah, money laundering takes a number of forms, and we can talk more as we go about the complexities of what money laundering actually is, but it's criminals trying to affect a few things, either to take money that's the profits of crime and try and make that money look like it's legitimate. So take illicit funds, try and make them look like they're licit funds. That's one element of money laundering. Another is a means by which criminal groups store wealth. So that is wealth that's generated through crime that needs to be stored somewhere, that's hidden from view or not obvious that it's illicit wealth. The third big element that we deal with in terms of illicit finance and money laundering is money being used for illicit purchases. So in Australia, we might talk about in a moment, we've got a significant narcotics problem, illicit drug problem, and people making purchases for those illicit drugs. And I don't mean individual people buying drugs, I mean criminal groups buying big drugs in bulk from other places and moving large amounts of money internationally for those purposes. That's really the kinds of funds that we look at. But in terms of the scale of it in Australia, it's really quite extensive. The Australian Criminal Intelligence Commission does a really important piece of research 3 times a year. They sample wastewater from around Australia, and they do that to try and get an understanding of the amount of illicit drugs Australians use. So that's, I mean, it's the unfortunate job of testing sewage to try and work out how many people use drugs. They do it 3 times a year, and through that work, we can get a really, really detailed understanding of how much drug use there is in Australia. Really, really detailed. And not only nationally, but between the different states in Australia and even localities within those states. And what it shows us is we have a really significant problem of illicit drug use in Australia. Traditionally, we've estimated through that research that the illicit drug market in Australia is worth about $12.5 billion. There's a report coming out tomorrow that shows it's actually much more than that. But if you think about just that type of crime, $12.5 billion, all of that is illicit money, all of it. There's no licit money in it. It's all illegally gained money. It's all then laundered through the Australian economy in various forms. If you take, most of you would be familiar with the illicit tobacco problem that we've got in Australia now. If you're like me, you're noticing tobacco shops opening on every street corner with not too many people in them. Big problem, really big problem. There's some debates about how much that particular economy is worth. But if I could give you a figure, I think the excise the government collects through legitimate tobacco's dropped by about 75%, which on the basis means more than 3/4 people who buy cigarettes are probably buying illegal cigarettes. That probably puts it somewhere in the realm of the illicit drug market in terms of the volume of money that's being generated through that. Again, that's all illicit money, and it's all being laundered through the Australian economy. And that's not touching on taxation fraud, the profits of scams, the profits of cybercrime, and the profits of other types of crime. So we really do have a significant money laundering problem in Australia that sits under the surface of our economy. Sometimes it's pretty obvious, sometimes it's really well hidden.
And I think it's really important to have an understanding of the depth of the problem that we're dealing with and to understand the rationale for the introduction of these reforms. Now, the law talks about terrorism financing, proliferation financing. And you'll see from this quote, terrorism is actually a very expensive business. So the money's got to come from somewhere. Can you explain the meaning of these terms that are used throughout the legislation?
Yeah, terrorism financing is pretty much as it's described, the financing of terrorist groups. I suppose terrorism financing and terrorism are slightly different things. So as we know through our own experiences in Australia and certainly in New Zealand, terrorists can do really awful things without any money at all. And some terrorist acts just require a focused person and a knife, for example. But there are terrorist organisations around the world that do garner money and require investments because they are quite large. Terrorism financing is trying to track the flows of those funds. So what we do is try and track flows of funds from Australia to known terrorist organisations around the world. And we do that every day. We track that and we provide that information both to our national security agencies, but also to security agencies in other countries. It's not as big a problem in terms of volume or value as money laundering. Money laundering is the major problem. The other thing that the legislation talks about is proliferation financing. And that's in all of the world's anti-money laundering schemes. And it deals with the illicit financing of weapons of mass destruction. Again, a much smaller problem in terms of volume and value, but a big problem globally. And in Australia, it's really money that's flowing to Iran and to North Korea. That's really where our focus is. And it tries to identify where funds might be hidden going to those regimes, or where people might be being employed that are facilitating that kind of activity in those countries. I mean, just, in these rooms, we've picked up payments going to people working for the North Korean regime that aren't actually based in North Korea. But we could tell through tracking funds flows that that's where they're getting paid from. Don't fully know if it's about weapons of mass destruction or something else, but we know it's not good. And we pick that up. We trace money going to Iran, and that's a big global problem. And we work often with our colleagues in the United States and Europe to identify shell companies and other things that the Iranians use to move money around. We've got a challenge in the Pacific where we have a whole bunch of international shipping registries attached to different countries. And I know our colleagues in New Zealand have just uncovered some challenges where the Iranian regime is using shipping registries to move wealth and value around the world. But that's something that we all try and keep an eye on. It's quite different to money laundering. The things you're looking for are different. The motivations are different. The volume of it is much lower, much lower. And for many of you who are coming into our regime, you might spend your entire careers dealing with money laundering and never come across terrorism financing or proliferation financing. That's probably not uncommon. Money laundering you probably will, because there's so much of it, but those other two things possibly not so much. And the challenge for us is because of the nature of that activity has a lot to do with national security, we don't really talk about a lot of it publicly. So there's often not a lot of information out there on that as well.
Thank you. So let's talk about the legislative framework. So we've had the AML CTF Act since 2006. So it's been around for a while. And really this covers what are my obligations. We've now got the AML CTF rules, which give us the specific requirements and any exemptions that apply. And we've got the AML CTF guidelines, which are guidance really, rather than being legally binding. We've got a new set of rules that come into effect in March next year. And as I said, that contains a lot of the detail in terms of the information that we need to provide, gather, and what we need to do in terms of registration. The guidance that has been put out recently by AUSTRAC, which is very helpful reading, has some really good straightforward examples of when we are supplying a designated service and what that looks like and when that kicks in. So they're really helpful. And in terms of, do you want to speak a little bit about the guidance that you've put out?
Yeah, just for people that might not be familiar with the regime in Australia, the laws applied here since 2006. And you read the speech of the minister introducing it into Parliament. He said at the time, this is Tranche 1 and Tranche 2 will shortly follow. That was in 2006. Tranche 2 followed 20 years later. It took a little while to get there. The way the Australian law works is it works on the basis of a designated service system. So instead of regulating entire businesses or industries, it the legislation designates services that get covered by anti-money laundering regulations. That does get a little confusing for some people, but that's the way the Australian law is structured. And it's a principles-based legislative scheme. So it doesn't go through and say you need to have A, B, C, or D in place specifically as some other regulatory arrangements do. It talks about risk and understanding risk. And the legislation sets the framework. From that, there's a set of rules. So if you think of the legislation kind of being the house that everything sits under, the rules are some more details inside that house. Underneath that is the guidance material that we recently released, and we will be releasing guidance early in the new year for specific sectors and industries. So the legislation covers everything, and for us, that's 100,000 businesses that range from Australia's biggest company to thousands and thousands of sole practitioners doing things out of their homes. And so, as you can imagine, that legislation is actually quite broad in its focus. And the regime gets more specific as you come down into that industry-specific guidance. And so the material that we've been putting out progressively since the law passed in November last year has been shaping that regulatory environment more and more. But one of the challenges that we faced and that we all face is the time frame for implementation is very tight. From the legislation passing to when the legislation commences for currently regulated businesses, those changes commence in March next year. That's not a long time for big companies to get ready, and we'll talk about, I think, that in a moment. It's also not a lot of time for a regulator to kind of get ready to take on 100,000 or 80,000 new businesses either. So you asked earlier, put your hand up if you're ready. I don't know, my hand might really be. So we're all in the process of getting ready for these changes. And for us, it's really been spending a lot of time trying to balance two things: to really try and listen to industry and listen to the breadth and the diversity of people that are coming in under the regime, not just in terms of the industries that they come from, but the size and the scale of the work that they do. As I mentioned, we've got lots and lots of sole practitioners coming under this regime and really taking a lot of time to listen to small business and trying to craft those rules and the guidance materials based on that information that we're getting back from business, while at the same time trying to get that material out with enough time for people to be able to use it to get ready, which means it's probably coming out later than most of you would like to see, and probably coming out a little faster than we'd be normally prepared to do it, because we still like to consult with more people on that. And we're trying to get that balance right. But the good thing is, I suppose, the legislation is passed by Parliament. All the rest of those materials are controlled by AUSTRAC. And so as this program and regime matures, we'll mature with it, and we'll be able to change that guidance and rules as we're coming across things that we otherwise didn't foresee in terms of planning the regime. And that's why we've made a whole bunch of changes internally in AUSTRAC and set up a whole new division based around industry engagement, so that we're constantly talking to business people about their experience of AML regulation, their concerns, and we can properly try and address those as best we can.
Thank you. You talked about the Tranche 1 entities, and we know that originally they were the ones that covered the financial sector, casinos and gaming industry, remittance services, digital currency exchanges, bullion dealers. We're, of course, part of the next tranche that's coming through. And I wanted to just talk about, or have you talk about, Brendan, the role of AUSTRAC. So AUSTRAC stands for Australian Transaction Reports and Analysis Centre. I'm really interested in AUSTRAC's role in overseeing and enforcing compliance.
Yeah, happy to talk about that. I think we're probably the worst named federal government agency in the world. You tell someone you went for AUSTRAC, they think you run the railway system on that. We have to be good. At a high level, we do two things. So we heard earlier about the FATF, this global body that sets money laundering standards. It has these 40 standards that it applies globally. It requires states to have in place anti-money laundering legislation, and it requires states to have a body that oversees and regulates that regulation, and it requires states to have a thing called a financial intelligence unit. In a lot of countries in the world, those functions from a government point of view are in multiple different places. So if you take our colleagues in the UK, for instance, their financial intelligence unit sits in their National Crime Authority, deep within the National Crime Authority. Banks are regulated by the Financial Conduct Authority. Traditionally, until recently, lawyers are regulated separately, accountants are regulated separately. In Australia, the government's taken the approach to put all those things in AUSTRAC effectively. So we perform two major functions. One is we're the regulator for AML for Australia. And secondly, we're what's called Australia's Financial Intelligence Unit. And I think that gives us a really unique position. And it's a benefit, I think, for industry in that having the regulator and the people that use the outcomes of that regulation in the same place means we're getting really, really focused around risk rather than just on compliance. And so what we do is we work with business and industry to try and make sure people understand their obligations and put in place controls to limit money laundering and financial crime. Part of those controls, as you might know, or we can talk about later, are a series of reports that you need to give us. The most important of those are a thing called suspicious matter report. We get those reports, suspicious matter reports, a thing we call threshold transaction reports, which are cash dealings over $10,000. And in Australia, we also get a thing called IFTIs, International Funds Transfer instructions, which we get from our financial bodies. And they're three very large data sources. And our financial intelligence unit uses that data to trace illicit funds throughout Australia and around the world. And we build a very big database of that information, and we provide direct access to that database to 5,000 people outside of AUSTRAC. So all of Australia's police forces, the Australian Federal Police, ASIO, national anti-corruption bodies, other regulators can all get in and access that data. So every time you're looking at the news and seeing someone getting busted for some kind of financial crime or a crime involving drug dealing or those kinds of things, you can almost guarantee they're using information from that database to source that. But the information that we get out of that reporting that hopefully you'll be providing to us helps us build that pattern of organised crime and illicit finance, and then helps us work with both national security agencies and law enforcement agencies to get out and chase those guys down and hopefully break down those criminal networks and put people where they need to be. And that ranges from really significant multinational organised crime groups, which we'll talk about some in a moment, hopefully some of the challenges that we do face there, right down to one of the things I'm most proud of, but really quite an awful problem, which is child abuse. So if I give you an example of what we do there, we get transactions, individual transactions, and we have a whole bunch of algorithms, that's in the banks, where we try and identify people that are paying for online child abuse in another country. We'll identify a person, we'll find out the account they're paying to, say in the Philippines. We'll then jump into our data and look at who else in Australia is paying money to that account in the Philippines. Through that, we'll build a network of people. We'll look at who else they're paying money to. We'll look at who else is paying money to those places. And so from one bad actor, we've suddenly got networks of child abusers, and we can go after them, and the AFP and other people can go and trace and track them down. So our focus is very heavily on that kind of work. And so that means that influences the regulation that we provide. So when I talk to a lot of my peers internationally who are just a regulator, who aren't chasing the crooks and doing the criminal bit, they focus very heavily just on rules and compliance. We're trying to really shift our focus to focus very heavily on risk. And what are we doing to shut down those criminal networks? And what can you do in business to help us do that and make sure that all of our effort is focused towards that, not just on ticking compliance boxes?
I think when we think about these reforms coming in and the obligations that will sit with us, having the context and understanding the how money laundering actually assists the types of crimes that you're talking about really helps us in terms of changing our mindset. So rather than seeing this as a regulatory burden, we should be seeing it as us playing our part in trying to mitigate some of these crimes that are being perpetrated. I think this leads us now on to a question of timing. So you see from the screen, there are a couple of critical dates. Probably the latter two are the ones that are really going to affect us. So we know that enrolment for Tranche 2 entities with AUSTRAC opens up on the 31st of March next year. We also know that by 1 July next year, we've got to begin with full compliance. So, Brendan, as soon as we hit the 31st of March, can we get on there and register and put out our information into the system?
Yeah, so we're very busy redoing all of our website and our enrolment processes to try and make them more intuitive and better. And so certainly the plan is from the 31st of March, business will be able to jump on and register. And we'd really encourage people to get ready to do that just early so that you're getting it out of the way and getting it done as soon as possible. But the requirement is that businesses register before the 31st of the 1st of July. So between the 31st of March and the 1st of July is that period where you need to get on and register with AUSTRAC. And we're trying to make that process as intuitive and as simple as it can possibly be. But you will need to provide information about your business and your structure through our website.
AUSTRAC has put out a lot of information, as you said, in a short space of time. We might need to rename you Fast Track, I think, at this stage, because, you know, we already look at it. I was just saying to somebody this morning, we're already at the end of the year. So what you've pushed through in a very short space of time is actually quite impressive, and you continue to do so, which is great to have the support of the regulator in that regard. So we talked about, you know, us being Tranche 2 entities and the high-risk sectors that have been identified. And we know lawyers, conveyancers, accountants, real estate professionals have been identified as some of these high-risk sectors, as those sectors that are vulnerable to potential money laundering activities. And of course, in the Tranche 2 entities are dealers in precious stones, metals and products, and trust and company service providers. I called us gatekeepers because we are at the forefront of the roles or the industries that we play in, to be able to have I suppose, a front row seat to being able to identify activities that may raise a reasonable suspicion of money laundering and counter-terrorism financing. Tranche 2 entities really need to have stronger regulations and monitoring to be able to mitigate these risks. Now, when we mentioned real estate professionals, that's going to probably encompass real estate agents, buyers agents, and property developers. So it's a broader kind of category than just saying, hey, it's real estate agents. Now, we talked about a risk-based approach. So that really means assess, manage, and mitigate those risks. And you'll find that as part of you putting together a plan and your program in place, a big part of that is analysing what we're doing as a business to identify our customers, to identify the risk, to identify what kind of designated services that we will be providing. Now, Roger, I want to switch to you. Roger's our Chief Transformation Officer and has been really instrumental in getting our firm ready for the reforms. Up on the screen is an implementation plan that Roger was quite instrumental in putting together for the firm. And I wonder if you could talk us through that implementation plan in helping us getting ready. What does it look like? How are we tracking against that plan?
I can do, and it looks a little busy, but I'll walk through it. On the left-hand side are the key milestones or deliverables, and basically what you should read there is the mandatory requirements from an AUSTRAC perspective. And then we've just mapped it out. As Brendan said, the runway is relatively short. So we started looking at this in June, obviously. Ideally, we would have required more time, but nonetheless, this is the implementation plan. One of the key things to look at is to understand your designated services and which part of your business provides a designated service, because not all parts will. A good example in Bartier Perry as a law firm, our insurance practice group and our workplace law and culture practice group probably doesn't, or not probably, they don't. They're doing workers' compensation matters, so they're essentially out of scope. Whereas another area like commercial disputes, corporate and commercial, private clients who are establishing trusts, setting up companies, buying and selling properties, definitely do. So understanding your designated service is a key requirement, and looking across all the risk factors: transactional risk, jurisdictional risk, client risk, service risk, channel risk. So it's a pretty risk managed framework, as Brendan mentioned, and you need to really be across that. So understanding that. Creating the AML CTF program, it's easy to rattle off, but there's a lot in it to bring that program together and to actually establish the procedures and the processes for your business. And that includes some subcomponents: client due diligence activities and understanding what that means and having a program of work around it, and potentially tapping into technology providers, which we fortunately have in the room today, to help us with that. But equally, employee or personnel due diligence processes, and people often forget that. There's clearly individuals working at the forefront of property transactions, the creation of trusts, the setting up of company structures. And today we generally do police checks, not generally, we do, most businesses do, before onboarding an employee. But in the AML CTF world, the personnel due diligence or employee due diligence activities is that on steroids when you begin and on an ongoing basis, to understand that you don't have any rogue actors within your own businesses working at the forefront of those activities. It's an important piece, but often forgotten. And then establishing the governance processes, making sure they're robust. Is it your board that has oversight? Understanding what is the governing body, who is the governing body, who are your senior management, are they the partners of the firm, and who is your AML compliance officer, have they been appointed? As some people I hear are still saying, what's an AML compliance officer? But it's clearly laid out in that program. And then training of staff. And this is a critical piece. It sounds easy, but people do need to understand what it is, how the regime hangs together, what part they play in it, and how to do simple things like ask a client where their source of wealth and source of funds are coming from for this particular transaction. Now, in a law firm, that's not a question that people have been asking for a very long time. And it's a very difficult behavioural switch. So there's a lot of training that goes into that. And it would be very similar in accounting firms, real estate agents, conveyancers, precious metal dealers, if not identical. So there's a behavioural change piece there. And then there's all the registration piece. So the bits you see at the end are when the go live or the launch date happens in July, but there's a lot of activity that needs to occur prior to that. So that's our implementation plan. And I would imagine from a practical perspective, this would be really useful for many people in the room to do something similar, or if not identical.
Yeah, and I think you touched upon a couple of things. So in terms of our preparation, part of what we're doing at the moment, we're in the middle of finalising our policy, our AML policy. So that's one aspect of it. And the other aspect is, as Roger mentioned, is actually the creation of the program. And there's a lot of detail and a lot of work that goes into the creation of the program, because what you're doing is working out who are our clients? What are the designated services that we provide? If we look around the different aspects of the firm and the services that we provide, it's breaking that down. It's providing a bit of a risk assessment around it. It's, rating it from low to medium to high. It's having a look at, the type of transactions that we're doing, which are possible transactions. Now, we could have a matter for a client that, we're doing a will for, but out of that, they need creation of something else. It comes across to my team, which is the corporate and commercial team. We're asked to, set up a company or create a trust, so the nature of it can actually change, where a client starts off not being provided with a designated service, but it can change very quickly where they then ask to be provided with it. So having that breakdown is really important. And I find that in reading the rules, a lot of the minutiae, the detail sits in those rules in terms of how it guides the preparation of the actual program that you're putting together. So we talk about designated services. There is a table. There's always a table, but there's a table that actually expands on what constitutes a designated service. And I'm not going to take you through each one, but this gives you a flavour of the types of professional services, for example, that fall within the category of a designated service. So it's really a case of, as I said, looking at your business, going through the table, understanding whether you provide any of these designated services, and then ranking those in terms of, you know, your risk profile. We talked about real estate. Somebody asked me about this, and there are two aspects to that, as you'll see on the screen. The second one probably captures the broader spectrum. For example, property developers that are in the business of actually, you know, selling real estate without necessarily using an agent. You know, brokering, guidance says a broker is somebody who acts as an intermediary or an agent on behalf of another. So it really is understanding what you're providing. You know, when we talk about real estate, we're talking about your normal, you know, freehold real estate, normally how you sell properties. Doesn't include, you know, a mortgagee, doesn't include leases under 30 years. So there are some exceptions in there, but it's really good to have an understanding if you're in that real estate space or selling or transacting or transferring real estate to understand what that involves. Okay. New compliance requirements. So Roger touched on this in terms of customer due diligence, so verifying customer identity and assessing those risks to comply with the AML laws. Record maintenance, so we're now required to keep detailed records of all transactions and customer information, because if we're ever called on it or asked to provide that information to the regulator, we need to be able to have that at hand. And, you know, we're keeping those records for at least 7 years. Transaction monitoring. So this is not a set and forget exercise. We might set up a transaction originally or be involved in a transaction, but it involves continuous monitoring of the transaction just to see if we detect any changes or anything that later gives rise to suspicious activities. And of course, Brendan mentioned suspicious matters reports. So reporting on suspicious activities, you know, doing that in a timely manner helps us comply with our AML requirements. Roger, when do we have to comply with these due diligence obligations, and can you explain the different types?
Okay, can do. And I'll apologise for the acronyms up front, but rather than say everything in full every time, when I say CDD, that's client due diligence activities. It's essentially been broken down into 4 things: simplified due diligence, enhanced due diligence, and you can either do that sort of initially or ongoing. Initially is prior to your clients being on board. It's exactly what it sounds like. And the lower the risk, you would probably apply a simplified due diligence activity. The higher the risk, for example, in the 3 main areas, setting up trusts, companies, buying and selling real estate, it would be more of an enhanced due diligence activity. Now, fortunately, the technology allows us to outsource that function and get a response back relatively quickly. But initial due diligence is all about getting a view of the client before they're onboarded and then making a risk-based determination about whether you onboard that client or not. Enhanced due diligence dives into a little bit more detail and gives you greater detail about that client. For example, if you're looking at multi-layered structures for a company, you ultimately want to find out who the ultimate beneficial owner is, or the UBO. And that could have multi-layers that you need to unpack before you understand that that client is domiciled in Korea. You won't necessarily see that by looking at the initial structure, but once you start unwrapping the layers through an enhanced due diligence process, it becomes very visible very quickly, and at least you then understand exactly what you're dealing with. Doesn't mean you can't onboard that client. In actual fact, I suspect AUSTRAC would prefer many businesses to onboard clients because they know that they're contained within the four walls of your business and you're providing suspicious matter reports or transaction thresholds reports to AUSTRAC regularly, and they can monitor it. So not a bad thing. There's nothing precluding you from onboarding a client if they fail a test necessarily, unless the risk appetite of the firm says that might not be the right thing to do from a reputational perspective. But there's four breakdowns: initial, ongoing, and that can be either simplified and enhanced.
Thank you. So our key message is be aware, stay alert. There is a degree, as you mentioned, of tracing back, and perhaps previously our identification of a client might have been somewhat cursory. This requires a more in-depth tracing back, particularly the more complex the structure that is involved. You've touched on customer due diligence and personnel due diligence. Now, I wonder whether, let's talk about personnel due diligence for a second. We use the word personnel because it's more than just employees. It could be contractors, for example. So do you want to talk through what we would be doing in terms of our personnel due diligence as a firm?
So right now, we obviously already do police checks when we're onboarding employees, as most businesses do. That's quite standard. And there are integrity checks. If you clearly hold a legal license, we need to ensure that license remains valid. Same for our accounting folk in the firm, etc. That would continue to be the case. However, here we're looking at other factors, particularly if you're working in a role that's close to property transactions, trust establishment, and company establishment. And the procedures would be the same for employees as they would be for clients. So we'd be looking at things like checks on sanctions lists, politically exposed persons lists. Has there been any adverse media? And obviously the employees would be self-disclosing if there's any particular issues that they should bring to the surface. So it's just a more detailed screening on an initial basis, but also on an ongoing basis, so that we understand what our risk exposure is, if at all. Because, let's face it, it's not impossible for employees of particular organisations to be involved in money laundering, terrorism financing, and proliferation financing schemes. It happens. You'd have your head in the sand if you didn't think it did. So that's why personnel due diligence processes have been baked into the legislation. And that's what we'll be doing on an ongoing basis. It sounds a little scary, I know, when you talk to this topic to employees, but it's nothing different to what we already do today. It's just a little more layered, and it happens on an ongoing basis for people working in high risk exposure roles. It wouldn't necessarily be for every individual, but certainly people working in high risk exposure roles would be subject to it.
Yeah. And I'm comfortable to say I've got nothing to hide. So look, this is very much about ongoing vigilance. So it's constantly observing customer transactions. If we notice an unusual pattern, if we see a client, for example, whose pattern of transaction is certain way, and then there's a sudden change to that, which is an aberration. It might be going from smaller types of acquisitions and suddenly there's a really large acquisition. So it's just being aware and looking for things that I'm not necessarily saying that in itself is a red flag, but it should be a flag that requires us to ask further questions and delve a little bit deeper. So we've touched on reporting suspicious matters on reasonable grounds. So these are some of the questions that really come out of that. What are the things should we watch out for? Is there a definition or guidance on this and timing to report? Because at the end of the day, your business might be doing these checks and identifying your customers, but we're probably, if we're providing a designated service on the front, we're on the front line of this. So often we're asked, or I'm asked by people, so what should we be looking out for? Is there a definition of what constitutes suspicious? So I'm going to throw this open to Roger or Brendan to jump in and give us some guidance and their views on, what could raise a suspicion, and maybe some examples of, examples of kind of suspicious activities and the timing of reporting these suspicious activities, because as you can imagine, time would be of the essence in that regard.
Can I give you some real examples of
Yeah,
suspicious matter reports?
It stays within this rule, in this room.
So we get about 500,000 of these a year from our current reporting entities. We get a lot of suspicious matter reports, and it's where something's unusual. But I suppose the key element of this regime, what we ask you to do, is to understand the money laundering risks that your business might be exposed to, and we'll help you do that. There's more and more information coming on our website. We're having seminars and other things that we encourage you to join that talks about how people launder money and what the risks are that your business might be exposed to. And there's a few things that we make assumptions about, just to be really clear with people. One is, if you're doing business in Australia, we expect someone's going to try and launder money through your business. We just expect that's going to happen. And I talk to our financial institutions that we regulate. I say, I expect that's going to happen, and I expect a bunch of them are probably going to be successful in doing it. Because they're criminals and they're pretty good at it. We expect that that's actually going to happen. But what we expect people to do is to understand where their business might be exposed to that risk and to watch for it in those areas that you say are high risk. But that also means we accept that there's a whole bunch of transactions that are going to be low risk. So in the real estate sector, for instance, most people buying and selling real estate in Australia are ordinary Australian people doing regular real estate transactions. They're not criminals. A small proportion of them are. And we'll provide more and more information that gives you indications of where those people might be, what they look like, and where they start to come out. If I can give you a couple of examples of ones that we've seen recently, we had one family last year, I'll speak about this one a little bit, who had immediate family members on a thing called the Interpol Red List, which is a list Interpol publishes that says to all countries that are members of Interpol, arrest this person on site. And so the brother and sister of a couple of people on that Interpol watch list turned up in Australia and bought $700 million worth of residential property in cash transactions. That should have been suspicious to somebody, but it's not going to be what to do. One of those people bought a $35 million house. Nobody could really identify this person's source of wealth. She stated her income was as a housewife. In that case, we'd say, try and identify who this person is and try and work out where she got the $35 million dollars from. That's a really obvious case of something being suspicious. If I can give you another one from last year, an alert bank that was dealing with importing businesses, dealing with a company that was importing furniture from China. And over the course of a couple of years, that business had grown quite significantly. So it looked like it had doubled the volume of furniture that it was importing from China. The alert bank said, look, it looks like this business's activity is going up quite significantly. It's not unusual that happens with lots of businesses. Good luck to them. But their insurances were the same. Their factory lease costs were the same, like their warehouse leases were the same. They looked like they were getting more staff, but nobody's ever sick or taking any holidays. They weren't investing in any plant and equipment. So they had, 2 forklifts or something, but the volume of furniture coming into that business had doubled. So that bank put in a suspicious matter report. So none of those things in their own right are crimes. Even all of those things together are certainly. But the bank who was used to dealing with furniture importing businesses looked at that and said, this looks unusual for a business of this kind. You expect a doubling in activity, you expect these other things to be changed as well, and they don't look like they are. So that business was a business importing furniture from China. It was also over-invoicing. So it was moving illicit money out of Australia to China by double paying for things, paying for 3 shares but only importing, for example. So that was a legitimate business that had a money laundering sideline and was laundering money. We had another one, for example, where construction company, and the construction company had a formwork part of that company. Again, went through a massive growth, really unusual amount of cash jobs for this company. wasn't buying any additional formwork. Its insurances weren't changing. These other things weren't changing. The bank said, this just doesn't work. And again, this we just had a quick look at that company. Its kind of board of directors were brothers of members of outlaw motorcycle gangs. And it was a front for an organised crime. But again, the bank looked at that and said, here's some activity that looks unusual for this kind of business in these circumstances. We're going to let AUSTRAC know, and here's some details around that. And we take it from there and do a bunch of other activity.
Can I ask you a question, Rebecca?
Of course.
Just thanks, Brendan. Just in relation to what you were talking about, looking at some of those transactions from the perspective of a tranche 2 entity, say a law firm like this one, where does the investigative obligation end in terms of those inquiries? I mean, are we required to be going to all available sources, including paid sources and third-party requests for information in order to, understand the full picture, or are we just obliged to base the investigation on the information that we have and is easily accessible in the firm?
Yeah, we ask you to do what's reasonable to do depending on the firm and the nature of the transaction. So one of the things is we don't expect you to be police, and we don't expect you to give us a brief of evidence that you would give a police firm. So it's really important to note a suspicious matter report to us is not the same as a report to the police of a crime. So what we're asking you to do is to report a suspicion. And a lot of the suspicions we get reported to us aren't actually crimes, they're simply suspicions. And so we would ask you to do what's reasonable to do. So it's reasonable for us to say to you, understand who that customer is and ask some questions about that customer if you've got some doubts about who they are. So if someone's trying to obfuscate their identity and won't give you identity documents, for instance, you can ask them reasonably to provide those documents to you. If those requests aren't reasonably met, put a suspicious matter report to us. I did a discussion with a group of pubs and clubs a couple of weeks ago, and a very diligent club who runs poker machines in Sydney said, we want to bring these people before a committee and interrogate them. And I was like, we're not asking you to do any of that. We're asking you to see this person's ID, satisfy yourself that that person is who you think they are. And if that person's trying to hide something from you and you make those inquiries that are reasonable, we're not asking you to put yourself in any harm's way or anything like that. We're saying if that's the case, put a suspicious matter report into us and we'll take it from there. A lot of the benefit we get from those suspicious matter reports isn't the individual report. Sometimes it is, like that bank report I told you about just a moment ago about that furniture import business. That's a very thorough report that comes to us. It's got mountains of data attached to it, all that company's transactional information, its company information, all of the information around that company that bank already had because it had been dealing with that company for many years. But often we'll get a report from a pub, for example, of someone who they know is on the dole, who's suddenly turned up with $10,000 and they're putting it into gambling machines and withdrawing it pretty quickly. And they'll ask that person where they got the money from. That person will tell them to go jump in the river. They'll put a suspicious matter report into us. And we'll draw that report with a whole bunch of other reports and start to build a profile of activity. And so often the value to us of those reports is in the aggregate, not the individual, in those suspicious matter reports. So it's really important to understand it's not reporting a crime like you would to the police. It's reporting a suspicion, and we're asking you to do what's reasonable to do in the circumstances of your business with your resources and your normal activity. And we expect that there's a limit that you're going to go to where you're going to say, it's not reasonable for us to go beyond this. It's not reasonable financially. It's not reasonable logistically. In the case of that club, it's not reasonable from a physical security point of view to stand in the way of a person to do that. And I always tell businesses, if you've got a concern, err on the side of putting in a suspicious matter report and we'll take it from there.
And in terms of timing, we're talking about within 24 hours if it relates to a suspicion of terrorism financing, and in most other cases within 3 business days. So obviously there are some, as I said from at the start, time is of the essence because, it can kick off an investigation to stop a crime. So the timing is something to be very aware of as well.
Rebecca, it might be worth adding, and Brendan, you might want to talk about this. A lot of people get tangled up on, especially when you're sitting in a room full of lawyers, what's reasonable? And people obsess about it. Well, it's based on your skills, knowledge, and experience as a practitioner in that industry. So if you're an accountant and someone's coming to talk to you about some stuff that Brendan just mentioned, what would be reasonable in that circumstance? And it's a suspicious matter report, but the connection between is the crook going to know that me personally has put in an SMR?
Yes, the answer is no on that. A lot of the businesses we're talking to at the moment in the Tranche 2 field are small businesses. Spent a bit of time talking to conveyancers, for instance, who are coming under our regulation. Most of those are sole practitioners or businesses with 1 or 2 people in them. Almost all of them are women, and almost all of them work out of their homes. And so the first question they ask me is, if I put in a report, is that person going to know about it because they know where I live, because they probably came to my house? So there's a couple of things to really know about. One is law enforcement can't use that suspicious matter report as a means of evidence. So it won't appear in a court prosecution against a criminal. It won't appear in a court bundle. It's a criminal offence to tip that person off. So it's an offence for us or for anybody else dealing with that material to do anything that would indicate to that criminal that someone actually has submitted a suspicious matter report to us. What happens with those reports is people use them as intelligence, and then police or national security agencies or whoever it is that uses those goes off and builds the case independently from that suspicion. So they can't use those reports in any way that's identifiable or that would in any way tip that person off that a report has been issued to them. And I've made a lot of inquiries since conveyancers first raised this with me to say in the 20 years, has it ever happened that someone's known about or we have any evidence of somebody knowing about a report being put in on them? And we have no evidence of that in the millions of reports that we've got since regulation's been in place. And we have very strong global networks, and I've spoken to my counterparts overseas. Have any of you got any evidence of somebody being identified as having put in a suspicious matter report or the equivalent in another country? And I can't find anybody that has that either. So I can tell you from an AUSTRAC point of view, we guard those things like gold. We make sure they're very well protected. If we do see anybody misusing those in any way, we jump on them and come on them like a ton of bricks kind of team, because we know the integrity of that system is just paramount to enable us to do what we need to do with that material.
So we touched on some of the reports, suspicious matters reports, threshold reports. Brendan, are there any practical ways that the legislation has introduced that might mitigate the weight of compliance obligations?
So really, if you think of the legislation requires you to understand the risk your business is exposed to and to understand that properly from the point of view of the risk you're exposed to. And here's a big change, a big conceptual change to where the regime has been since it started. That is, from March next year, it really puts risk at the centre. And so that means everybody is focused around risk, and that means the regulator as well. So we don't go around doing ticker box compliance exercises and nickel and diming people because they got the wrong thing in the role. We don't worry about it. And if you have a look at our record of enforcement, you won't see any of that. You see us taking action against people that are willfully non-compliant, where they're profiting from crime, where they've been warned by us about things over many years. We take action on those kinds of things. Everybody else, we practically help to try and get things right. But it means focusing on those areas where you're exposed to risk. And that means all of us understanding there's a whole bunch of other activities that you will do that are low risk. And for low risk activities, you can do simplified customer due diligence. That means you just establish who your customer is, who you think they are. You don't really need to do anything other than that, unless through the course of that transaction, you develop a suspicion for some reason. And it's really enhanced customer due diligence, sources of wealth checks, all of those things are based on the idea of having a suspicion. So if you've got no reason to be suspicious of that person or that transaction, you don't have to do those other things. It's really when you're starting to form those suspicions, that level of activity should come up. When you're dealing with a housewife from, a known money laundering jurisdiction who's turning up with $35 million to buy a house, you should say, man, that sounds a bit suspicious. I should ask her some questions about who she is and where she got the money from. But if you're dealing with a person that you know, you're pretty confident about your understanding the background of that person, you've dealt with them, their circumstances haven't changed, there really is nothing suspicious in that transaction. You just need to assess And to satisfy yourself that you know who that person is and that you know why they're doing business with you, that's enough for us. That really is enough for us. What we really want you to do is focus on those areas that are suspicious. What we don't want you to do is spend all of your time focusing on things that aren't suspicious and put all your effort equally everywhere, because then you really will miss the things that really are suspicious. We want you to focus on those areas of risk and focus on things that are suspicious. And if you're concerned about it, you've got questions about it, you really don't know where to go from there, that's when you put a suspicious matter report into us, and we take that from there. When we do our compliance activity, when we look at where we're going to focus our regulatory effort, there's a few things that we look at. We look at from ourselves where we know risk actually is. And then we look at businesses in that area and say, are they actually reporting anything to us? And if they're not, we'll dive down and say, well, why aren't they? So if I can give an example of some action we're taking at the moment, particular area of the financial system that moves large volumes of money between Australia and other jurisdictions. We looked at a whole bunch of businesses who've never reported a suspicious matter report, doing large volumes of transactions between Australia and Southeast Asia. We used our power to get a whole bunch of transaction information out of those businesses. We put those transactions through our known red flags for child abuse, and we found a whole bunch of child sexual activity happening under the noses of those businesses. We've been speaking to those businesses for some years. They're going to be in some trouble from us. They should have had an understanding of the risk, and they should have been monitoring those transactions for that risk. Because they didn't, a whole bunch of kids got abused. That's the kind of stuff we look for. We're not nickel and diming them about, did they get this right or did they have this tick in this box? We're looking at actual risk and whether that risk is realised or not. And so that's how we do our work. When we come and we look at businesses that are really trying to do things well, but they might have some things wrong, we work with them to try and make those improvements. And I can tell you, we work with Australia's big four banks all the time, constantly. They invest hundreds of millions of dollars in financial crime, and most of them do a pretty good job. All of them have got improvement programs, all of them. All of them are doing things where they've got a shortfall and they're doing something to make that better, or we've noticed a challenge and we're saying you need to focus on this or challenge on that. But we work with them to try and make that activity better rather than jump in and penalise people, because our job is to try and make sure it's harder for people to launder money through the Australian financial and commercial system, not to just prosecute people because they're not ticking the right box. We really want businesses to be looking for suspicion and risk and shutting crime out. That's really what we want people to be doing. And we don't really run around the countryside prosecuting people for the sake of it. We only do it where we can't get any other kind of activity.
And I think you described it as, as long as we're using honest efforts to comply, we're not the ones that are being going to be targeted, as I said, for the small things in terms of compliance. So honest efforts it's comforting as long as we're trying to do the right thing.
So there are a lot of, through our financial intelligence, there are a lot of businesses that are actively involved in crime. There are a lot of lawyers that work with criminal groups to help them hide funds. There are a lot of accountants that work with criminal groups to help establish front companies and corporate structures. There are lots of real estates who regularly do business with organised crime groups. We know who those people are. 1st of July, all those people are going to get a visit from us. Lots of those people already are getting visits from the AFP and others. We know who those people are. We'll deal with those people separately. What this regime is trying to do is to get honest businesses to help us focus on crime and shut criminal activity out. So we're not doing this because we think businesses are full of criminals or are actively profiting from crime. What this is really trying to do is educate businesses about the scale and the nature of the financial crime problem that we have in Australia, and get you to focus in ways in which you can work with us to try and shut that out and make it harder for criminals to profit from their crime through laundering money through Australian business.
So as we get ready and move towards the 1st of July, some of the questions that have come up are around, the cost of compliance, especially for small businesses, and the importance of training. You must get asked this a lot. Training, I think it goes without saying, is really important. Just, whether you do it at this level, whether you're doing it for your staff who are going to be on the front lines. But there is a concern about the cost of compliance. And I've had small businesses say, how are we ever going to afford this? Can we pass on the cost? What are your comments on that, Brendan?
Yeah, we're really cognizant of the cost of compliance to business, which is there is a cost in doing this. There's no hiding that. It's more effort on some areas and more effort in others. We've really tried to shape both the regulation to try and reduce that burden of compliance and to try and allow innovation, to allow businesses to think differently how they can comply, to try and create provisions that allow information to flow through the course of a transaction. Property is a good one, where people can have in place agreements that allows things like customer due diligence activity to flow from one business to another, so you're not doing the same activity twice. Really cognizant of the effect on small business, and we're doing something that no other country really has done, in that for small businesses in Tranche 2 entities, we're going to design the program for them. So we'll give them what we're calling a starter program, which will involve a risk assessment for that business. So these are the risks we think this business will be exposed to. And these are the things we think that business needs to do to be able to comply with AML law and satisfy our business. So they won't have to go out and get external advice, but can just take, the way we're designing these programs is the idea is they can take that up, implement it, and that's all they'll be required to do. And through the course of time, we'll provide additional information to those businesses about new risks that we see or better areas of compliance that we might focus on. And so from that point of view, we're trying to make it as simple and easy as we possibly can make it for small business to comply with this. There is more effort, both from a business point of view and from a customer point of view, participating in this. There's no hiding that exists. But we're really trying to make it as simple as we possibly can for people to comply. Those programs will be available for small businesses, and we encourage all of you to look at that. If you've got a bigger business, a more complex business, you will need to have a more bespoke program, but you could use that program as a start for that. And again, it's about risk. So if you're providing bespoke property services for high net worth cash buyers from Cambodia, you're probably going to be in the highest risk money laundering category in the country. You probably need a really tight money laundering program. And everything else below that is a graded level of risk. But understanding the risk that your businesses are exposed to is really important. Again, we've got a bunch of assumptions that we're basing. One is most people who are coming under this regime have never dealt with any of this before. We assume that most of you have never dealt with money laundering or financial crime or organised crime before, and all of this is brand new. So understanding what your risk might be is a brand new thing for most businesses to understand. Understanding how to comply with this law is very new for everybody, and we appreciate everyone's going to be on a steep learning curve from now for the next couple of years. And the way we will work with you will be based on that assumption that we know it's new, we know people are learning things, we know people are going to trip over along the way, people are going to make mistakes, and there's going to be black spots. We know that. And we'll work with you to help understand your experience and where we can provide you more information to make the regime clearer as it goes. And as I say, we're not nickel and diming people for non-compliance. We're really looking for those people who are actively benefiting from organised crime, who are profiting from organised crime, or who are just willfully non-compliant with the law.
So I think there are a few things for us to think about as we get ready for these Tranche 2 reforms. I'm going to just, before I open it up to questions, just ask Roger, what are the 3 challenges do you think that we've experienced in putting together our program and our policies and getting us ready for the start of the reforms?
I'll get to that in a minute. I just want to add to Brendan's comment about, look, there's obviously a practical cost associated with screening clients. In the New Zealand regime, there is a provision in the legislation which allows firms to pass that cost on to clients. It's silent in the Australian legislation. So the UK and Australia have been grappling with, do we pass the cost on to the client to basically do a disbursement check? Now, some businesses are happily doing that. Others who are much bigger and there's more complicated checks and processes going on where you're unwrapping company structures are less likely to do that because they've bundled it up in their onboarding processes. But it's a business-based decision, I guess, on whether you want to do that or not. So that's just one thing to add to that.
If I can say the banks pass that cost on to you, there's no question that those costs are being passed on to the customer.
Well, if the banks do it.
It's a bit like, you've got, when you're getting your driver's license, there's some mandatory costs and they come onto the individual driver. So similar sort of concept, but clearly it's a business decision. But to answer your question about the 3 challenges, the first thing is to have a decent project management plan wrapped around the implementation, similar to the one we were talking about before. The second thing I'd say is to have a people-focused change management plan. And that's not just a buzz phrase, but it's really important to have a robust people change plan so that people are involved in the process, understand what the regime's all about, have been trained and feel comfortable and confident to recognise signs that Brendan was talking about to submit an SMR, because there'll be obvious signs where you go, hang on a minute. Why are you not giving me the information in relation to your identity, or why is this information a little bit sketchy or light? Well, that's a reason to submit an SMR, and you need to feel comfortable and confident to do that. So having a change process is important, and avoiding the temptation of focusing on the outlying edge cases. So in a lot of the seminars I've been to, people are asking all sorts of questions on the most intricate pieces of detail related to the legislation, which is extremely useful. And if you want to know that, that's great. But it's important to get the basic building blocks in place. And fortunately, AUSTRAC has released a whole stack of guidance notes, even videos that you can utilise, and you don't need to go and pay for them to get done. Utilise what AUSTRAC has created and just repurpose them. They're very effective and they're right on point. So I'm sure when AUSTRAC comes to audit, or when they do and they ask about staff training, if you roll out, here's the video we provided, thanks for actually giving it to us, that would be looked on favourably, I'm sure. So the point there is to use the material that's already in existence. So they would be my top 3 things I think are important for a business to get ready to land the change safely.
Thank you. We might open questions up to the floor. Wow, we must have answered all those questions.
So AUSTRAC has released a whole lot of guidance, and you've indicated that you're releasing sector-specific guidance in January. How different is that? What change does that make to the guidance that's already been given?
Yeah, so the guidance, as I mentioned earlier, there's rules. So if you take customer due diligence, for example, the legislation talks about customer due diligence. The rules talk in some more detail about the levels of simplified customer due diligence or enhanced customer due diligence. The guidance starts to talk about what you do in practice. What does that practically mean? The sector-specific guidance will be, if you're a law firm, what might be some of the risks you're looking at, or how might you apply that specifically to your firm? So if you think about the kind of, from the legislation down to the sector-specific guidance, we're trying to get in more detail as we go down. Just as I mentioned earlier, so the legislation is applying to upwards of 100,000 businesses in Australia, ranging from the Commonwealth Bank to sole practitioners. And it's trying to apply a bunch of standards equally to all of those, which is almost impossible to do. So, yeah, it sets that framework, and then we try and get more specific as we get down into that level of detail. So the starter programs, which is the next level of detail, again, will be, say, ask this question, fill this form, tick this box, do this thing in as much detail as we can possibly get.
Any other questions? If not, I might ask you to join with me in thanking both Brendan and today's presentation we brought to you by our fraud and corruption team at the firm, and I'm part of that committee. So we're here to answer any questions. Feel free to stay back and for a few minutes and ask Roger and Brendan any questions that you think of. Thank you.